The U.S. economic future. Hey everyone, it's Wolfgang. So things have changed kind of sudden-like after last week's surprise revision of labor data. And there was a big drop in the stock market, and then we had a big improvement starting this week. So I want to describe what has happened, bring everybody up to date. So the latest, the stock market has rebounded. There have been very strong second quarter earning announcements. A positive uptrend for the gross domestic product of the GDP that's been revised upward, and interest rate cuts are now coming. So let's talk about the implications of those things, starting with the stock market rebound. August 4th, which was yesterday, there was a huge recovery in the stock market. There had been a big drop when the labor data, that there was a big surprise, a downward revision in the number of jobs at the end of last week. That really shook investor confidence in stocks. The stock market dropped last week. This week, there were some changes made. There was a decision by the government to emphasize, accurate data. And so the government started taking steps to make sure that happens. And on August 4th, there was a huge recovery in the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. They recovered the losses from, just the prior week. They really snapped back in a positive direction. There's government action for accurate data. So the government has decided that reliable data about the job market is essential. And so they took dramatic action last week. The Bureau of Labor Statistics is going to see some changes in the people, making the decisions at the top and presenting the jobs data. So the government decided it's healthier for the market if everyone knows what the accurate job data is, and they started taking steps to ensure that. So, the new people have not been appointed yet. That's upcoming, but there's an expectation that there's going to be an emphasis on getting people involved in the Bureau of Labor Statistics to present accurate data. And there are some repercussions for interest rates after these changes. Okay, so that was the rebound in the stock market. It was basically caused by the government putting their foot down and saying, no, we need accurate data. We're going to take steps to make sure that happens. Another bright spot, earnings reports. A high percentage of U.S. companies announced that they had beat analyst expectations for earnings. That's a great sign. Reason being, when companies are reporting that they're beating analyst expectations, that means people are spending. That means they're spending in the economy. And spending in the economy generally is like, throwing a rock into a pond. It ripples outward and it starts to affect all the parts of the economy. The knock-on effects, if there's evidence of spending in the economy, it starts to affect the entire population. And so there's evidence of increased spending, and there are knock-on effects that we should expect to see. Having the majority of U.S. companies beat analyst expectations, really great news. That's excellent news. Okay, so there's been an upward revision in the GDP. A part of this has to do with changes being made with the jobs data and the expected drop that's coming in interest rates. The Federal Reserve GDP Now model today announced an upward revised GDP. So higher spending, more emphasis on accurate job data, and stock market rebounding. This is going to help the GDP. So the third quarter GDP was revised upward as of today, the 5th, August 5th, 2025. So interest rate cuts. Okay, so let's talk about this. Interest rate cuts in the economy are coming. People have been begging for interest rate cuts for a long time. And, there's been an expectation or sort of an insinuation or suspicion that the jobs data over the last several months was inaccurate. And turns out it probably was. Not sure if it was the method or what, but the jobs data all of a sudden at the end of last week showed up. It was a big shock, downward revisions for the past 3 months. And so the expectation is that interest rate cuts are now very likely. People have been asking for interest rate cuts. It's now going to happen. The shock of the jobs data from the Bureau of Labor Statistics last week, instrumental in making that change, making that happen. So lower interest rates will improve the propensity to spend in the economy. Okay, and here's why. So when interest rates decline, and these are short-term interest rates, okay? When short-term interest rates decline, more people can get approved for a car loan. More people can use credit card credit to buy things, and so over the whole population, when short-term interest rates drop, more people begin to spend, and when that happens, it starts to affect the entire economy. So lower interest rates will improve the propensity to spend by making it possible for a larger part of the U.S. population to spend in the economy. Lowering interest rates, lowering the cost to borrow. If you're trying to buy a car, you'll see it. If you're using credit cards, you'll see it. Anything where you need debt to make purchases, you will see a drop in interest rates. That's coming. Okay, consumer confidence. So this is another improvement that has just been announced. I mean, we basically got to the end of the second quarter, and these are changes that are sort of anticipating the drop in interest rates and the new commitment to accurate data about the job market. The University of Michigan Consumer Sentiment Index is up in July. The Conference Board's Index of Consumer Confidence is also up in July. So we're sort of on the precipice of an uptrend because of these changes. I mean, the two biggest changes, obviously, the commitment by the U.S. government to ensure accurate jobs data and the cut in interest rates. The expectation is a 50 basis point cut in interest rates. Okay, some things I could not fit on the board here. Where growth is occurring in the U.S. economy. So there is growth in some parts of the U.S. economy that are kind of blowing away everything else. And most of us know what the areas are. In technology, Palantir announced huge improvements in their business. Palantir is a technology company, big clients, millions and millions of dollars in their contracts. DuPont and Dow Chemical in chemical technology are growing. They're doing very well. And in artificial intelligence, that sector alone, that part of the business environment in the U.S. alone is, it's putting almost everything else to shame because there are like 10 worldwide significant large language model systems, and the U.S. has 8 of them. U.S. has 8 of the 10 large language model AI systems being developed in our country, and AI employment is growing the fastest in the U.S. So it's a new technology, and the U.S. is leading. That's pretty common for the U.S. to be ahead of most countries in technology. No difference here. Large investments are being made in U.S. artificial intelligence companies. There have been 1,143 AI companies receiving funding. That's a huge number of companies. 1,143 AI companies getting funding. That shows a lot of confidence in investors in artificial intelligence. And the future growth in the U.S. gross domestic product, the GDP, AI is expected to play a big role in that for the next half decade. So it sort of gives you an idea. At the end of last week, things were a little bit, the stock market really corrected down hard after the jobs data was announced to be wildly incorrect. The government stepped in to restore confidence and announced changes at the BLS, the Bureau of Labor Statistics. The markets recovered. And we had earnings reports that showed a large number of companies beating analysts' expectations. So parts of the economy are better than others, obviously, especially the AI sector. But as interest rates come down, the knock-on effect of that will, it will increase spending throughout the economy. That's great for all of us because as spending increases, interest rates drop, spending increases, it leads to more jobs in the economy overall. So we expect within probably in the third quarter, within this quarter that we've started, that most of us are going to see big improvements in the economy. And it started with, it started on a soft note when the Bureau of Labor Statistics data was shown to be unreliable, and the government steps in. Wham! We're going to fix this. Right? Very responsive. That was a good move in our opinion. And we want the AI sector to grow. We want the knock-on effects of the increased spending as interest rates drop. We want that to affect the entire economy and help everyone. So if you have any questions about this, data sources and so on, you can post in the comments. I will try to answer any questions you have. And I really want to thank everyone for watching and have a great day.